Hello, good morning, everyone. I'm Renato. I'm Suayan, reporting stakeholders and their stakes. Our learning objectives is to define the meaning of stakeholders and to differentiate the types of stakeholders, to know the role of stakeholders, and to differentiate the internal and external stakeholders. Stakeholders in business organization. Now, when we talk about business or commerce, there are various important domes which we need to understand and learn. One important dome in business are stakeholders. Now, business organization can run their business in isolation. Efforts of various people are required in order to run a successful business. People who are associated with business organization is the people who have their interest in the business. All those people who have their interest in the business or who expected benefits out of the business are known as stakeholders. Now, to define the meaning of stakeholders, there are all those people, organizations, and institutions that have an interest in how well a business firm or commercial organizations operate. Anyone with an interest or influence on the business. So basically, whatever decision of business organization in making those decisions affect many people, and the people who are affected by the decisions are the stakeholders of that particular business organization. To differentiate the types of stakeholders, when we talk about stakeholders, there are various types of stakeholders. The people who are working within the organization are known as internal stakeholders, like employees, managers, and shareholders. The people who are outside the business organization but still are connected within the business organization and have their interest in the business are known as external stakeholders like suppliers, bank and lenders, government, local community, and customers. To elaborate more the types of stakeholders, first is the society. The firm benefits the local community because it creates jobs and boosts the local economic community. The society provides us with people who work with the business organization as employees. They provide us with financial resources, example, the banks, the financial institutions that we have in the society. And then from then, we can borrow money in order to run the business. Next is the customers. Customers are the people who purchase goods from the business. You can count on the company to deliver effective and superior goods and services. Ensuring the success of any organizations depends heavily on serving the wants of the consumers. Therefore, even the customers are interested in the business organizations that we make because they invested their hard-earned money just to purchase the product. Next is the government. They are regarded as a significant investor in the firm because they collected payroll taxes from both the employees and the company, and what we call the corporate income taxes. As we all know, the highest your profit are, the higher the taxes to pay to the government. Next is the employees. Employees possesses a direct stake in the business. They have direct client interactions and generate income from their own support as well as that of the corporate organization. Employees are the human resources. They are the people who provide us physical and mental effort to run a business. And also, in return, they earned a good remuneration and a job security. Next is the shareholders. Shareholders are the individual who invest something of value into an organization in exchange for fractional ownership. Their interest is focused on the financial gain, and their role in the company's operation is often minimal. Shareholders, as the name implies, is a co-owner of the company. They provide capital in the business, and from that, they expect in return on what they invested in the business. Next is the suppliers. Suppliers are people or business who sell goods to your business and rely on a revenue from the sale of goods. Provide the raw materials or components that company uses to create its products. They also provides in after sales service for them to have a harmonious relationship on the business. They sometimes have a tie-up contract with the suppliers for them to have a regular account and to maintain their business on the partner business organization. Lastly is the creditors. Creditors lend money to businesses and they could also have an interest in companies' worth. Creditors get paid back from the sale of products or services at your business. In the event of business shutdown, creditors get paid before stakeholders. Creditors include banks, suppliers, and bank holders. Creditors are individuals or businesses that have lent funds to another company and are therefore owed money. And in contrast, debtors are the individuals or companies that have borrowed funds from a business and therefore owe money. And to sum it up, I made a table for easy glancing to differentiate or to be familiarized more on the stakeholders and their stake in the business, also the expectations. And I hope you easily differentiate each and also to have a deeper knowledge with regards to stakeholders. And that's all. Happy learning, guys. Thank you.